So, hello, Matt Dahlman.
Hello, Amberly.
So, why don't we start with us chatting about what you do? What is your professional title?
Well, I'm a mortgage broker. I work with Monument Mortgages here in Vernon, and I basically help clients shop around so that we can find the best mortgage to suit them, whether it's getting them approved for more at potentially a slightly higher rate so they can get the house they want, or getting them the best rate because they're within their budget, and we can shop around to the best lenders and with the best features to the mortgage, and making sure that I help them plan financially through their mortgage to get ahead and reach all their goals.
Nice, nice. I do know that you are very good at what you do, hence why I've asked you to come on here. I've seen you, I always say like you pull a rabbit out of your hat. You always, and you're very diligent and work hard for your clients. And so I really appreciate all that you do, and I've seen you do. And so tell me, so what happened today? This is the reason we decided to chat today. What happened with our interest rates of January? What's the date today? The 25th?
The 25th. Yeah. So we saw a 1/4% bump, which was expected. Basically, when the unemployment rate came out at 5% early January, at that point, everyone felt like there was going to be an increase. Inflation did come down. It was expected at 6.4, it's at 6.3, but not low enough for them to pause. They are thinking that this is kind of after this one, they're going to pause. So we should see rates kind of level out for the foreseeable future, and they're going to kind of wait and see how this affects inflation. And they're hoping to see inflation down in the 3% range by mid 2023, which doesn't necessarily mean we're going to see any rate cuts, but we should be at the peak or close to it now. So that's a good sign.
Yeah, it's good. Yeah, we heard in our brokerage meeting the other day, we heard a similar story as well. And my assistant and I were like cheering, like, what? Like, because it felt a little bit overwhelming, in the fall there, just as they were, another increase, and just seeing how the stress of many, normal blue collar Canadians as to what that meant for us, and how it's going to affect our families and life. But it seems that maybe there's some light at the end of the tunnel. Is that what you're hopefully saying? Is that what I'm picking up?
Yeah, and there's so variable rates are based on prime. So this is just affecting people who have the adjustable mortgages where the payment changes with each one, or the variable rate where the payment's the same, but the amount of principal you're paying changes with the change in interest rates. The fixed rates are based on the bond yield, and we're actually seeing them come down. So we do have some insured mortgages below 5%. We're seeing them around 4.79 with some lenders. And the 3, 4, and 5 year fix are a little bit nicer. 5.34 is the nicest 3 year I've seen, and 5.24 is the best 5 year. But as I said, the bond yield is down, and we may see some price improvement on the fixed. Counter to that, the Bank of Canada is letting the bonds that they own lapse, which means the yields may come back up. So whether we see a drop with the current bond yields would be nice. That's when you want to get in your rate holds. They're good for about 120 days. If we see bond yields go up, then we might see fixed go up as well. But currently, they're a lot nicer than the variable rate. So getting into a short-term fixed rate, I would say is one of the better options right now. Because I think we're only, a couple years out of better rates.
So what do you
So
think
it's a
the
good.
average like variable rate is right now? Like your best one that you can find?
The best would be prime minus 0.9, then that's an insured one, so less than 20% down. So prime's at 6.7, so you're looking at a 5.8.
Okay, so
uh,
it's just slightly under like a fix then.
Slightly higher because
Oh,
it's about 1% above a 5 year fixed.
oh, and so my apologies. What's a 5 year fix then?
4.79.
Oh, look at that.
So,
We'll be talking after this, you two.
well, the hard thing with the 5-year fixed is if you look back historically, when you kind of get to the peak of their heightening of rates, it tends to be about 15 to 22 months before you start to see a rate drop. So if you're in for 5 years now, you're probably going to see rates come down, 2 years into that.
Oh,
And then for the following 2 years, you're going to see that you have the high rate, and the penalties for breaking a fix are very high. That tends to be why people go variable, is less, a rate savings as ensuring themselves that if they do need to break their mortgage, and 60% of mortgages get broken within 3 years, whether it's a refinance, a sale. So it allows you some flexibility that, rates come down in, 15 months to 2 years. You can then break your mortgage, pay a small penalty, and at that point, potentially lock into a fixed rate at a lower rate. So a lot of my clients, looking at that, are going either a 2 or a 3-year fixed. The 3-year is a nice drop from the 2-year with most lenders. So they're doing the extra year, which should still put them in the kind of window of opportunity to get a lower rate once their mortgage is up for renewal. And but with the 5-year, there is a good chance they're gonna miss the dip.
right.
So
Right.
no crystal ball here, no predictions, but looking at history and how it's kind of repeated itself. I was running up the numbers there, and from peak to peak, going back to the 70s, between 15 and 20 months is your pretty standard high rate period, where, and there's some fluctuation in there. So we may see, another 0.25% up or down in the next couple of years as they kind of watch the market and adjust to it. And we may see even up, another 0.5 or 0.75 if inflation is sticky. But given that there's a bit of a pause now, we can potentially, start that clock and look at.
So would you say someone that's in a variable rate now, at the beginning of a variable, because that's what happened to a lot of people that got into the market last year, interest rates were low, and obviously the year before as well. So a year, 2 year, if you were in a variable, would you say that it's not a bad idea to get into a 2-3 year fixed right now? Or would you just say wait the 15, 20 months till it dips back down, or hopefully does based on history?
Well, part of the issue is with these high rates is your penalty is going to be a bit higher than when you first did it. So it's going to depend person to person on the size of their mortgage and the size of their penalty. And I would just run the numbers myself. So if you're going to, pay $5,000 to break your mortgage, are you going to save that in interest over the next 3 years? Do you have $5,000 today to save, a few hundred a month for the next 3 years? Or do you not, and you're better off, riding the course and going?
It's very individual, is what I'm hearing you say. But it's nice that you even have the ideas to ask the questions, which is nice.
For sure. Yeah. And it's just, for me, it's all about the math and the numbers, right? So if you have the money, but you need a lower monthly payment, because a lot of it for people isn't how much interest they're paying, it's what's coming in per month and going out per month. So if it's going to provide some relief on your monthly payments and you need that, then it might be a good idea to do that. The other one would be risk, as far as we really don't know what's going to happen in the next year. If inflation stays high, and a big part of inflation is the fuel prices, which have come down. If they go up a lot, then inflation's going to have a trouble continuing to fall, in which case they may raise rates to continue to fight it.
Funny how people, it's always when people talk about inflation, in my experience anyway, it's always you hear about either gas or groceries. And I'm sure gas is obviously like the transportation of food and all that jazz too, right? And obviously the vehicles needed to create the food, but Yeah, I feel like that. I just heard this morning from a friend of mine that she was like, I love the gas seems to have stabilized, but the groceries are still there. So it's nice like that we are all feeling the relief on the gas a little bit. No, obviously we're all a little bit more used to it too, so that does change our expectation. But the groceries, I have three teenagers, and it's 350 every week. For
Well, hearing higher from some people, so.
Yeah, like, yeah, I feel like we're actually not too bad at, figuring out like, because especially because I got two teenage boys, they're super into meals. So thank God
Yeah,
they are, because I find snack food to be actually, well, I'm not saying meat and all that isn't expensive, but you create the lasagnas or the huge casserole dishes that are for two meals out of it, because these guys are, well, I don't even know if I can get two meals out of it. It's more like a meal and then their next day's lunch, because
right.
they eat a lot, but it's insane. So if, you're looking at $1,200-$1,300 a month in groceries, and I'm sure my parents would have said, quite a difference when, I guess that is a little while ago.
Well, I believe they're saying that the average family of four is about 16 grand a year in groceries right now.
Yeah,
So
yeah,
the hard part is, I mean, if you're making 50,000 a year uh, as a single income, when
yeah,
you have rent and groceries and gas and things like that, it can be very difficult to get through this. The other part of it is, as a side note, like it's going to have some health impacts, because often the cheapest food is the least healthy.
yes, yes. You
So
bring up a great point, because honestly, like, it's not easy to, like, I mean, I'm sure we all do this, but like, you ration your food to bring out like the fresh fruit every couple days. Cause it was funny just the other day, my middle guy, he's 15. He's like, "Oh, I didn't know we had grapes." I'm like, "That was the plan. I hid them." Like, cause everything would be gone in the first weekend
yeah,
um, of the groceries. But you're right in the aspect, it is hard to keep like fresh fruit, fresh veggies in the kitchen because it's so expensive. But then you'll start moving towards like the cheaper stuff, and I don't want my kids and myself eating that all the time. Once in a
definitely.
while, okay, but
Well, I think, the good veggies and the meat bolster with the, good starch can help you out there, because usually the rice and the
yeah.
potatoes are cheaper, but
Yeah, it's funny because
yes.
my kids are quarter Japanese, so thank God they always teasing me that if I don't
Yeah.
have rice, they're like, "What, you racist? You don't want to give us rice?" I'm like, thank God you love your rice, because at least like obviously you can get the cheaper rice, and you always hear the scary stories about that, but at least I think we're okay on the rice. The pasta, it is cheaper, but it is kind of nerve-wracking too, as to like all the things you hear about. It's hard to trust about the food, which way to go.
Yeah,
I don't have the answer to
definitely.
any of it.
Well, and I don't know, the gluten thing as well as affects a lot of people. Um, but yeah, you do the best you can right now,
Yeah,
and
yeah,
obviously the people who are on the lower end of the income scale are going to suffer the most through this,
yes,
um,
yes,
as
yeah,
they usually do. But
yeah,
I mean, the unemployment rate is an interesting one, as it's a big effect on their policies here with interest rates. And the kind of two drivers there seem to be the retirement of the baby boomers and the immigration side of it. So I don't know that it necessarily um, is indicative of how the economy is doing in the way that they're saying it does. Is, through COVID, I think there was a lot of people who just decided to hang it up a little early, getting close to retirement and just deciding, I only have a few years left. And
mhm.
with
Oh,
the,
I think that's so common. I mean, obviously, as a disclaimer, this is just our opinions. We're not experts
yeah,
on this. But what I would say is it's true, like for my parents, our parents' generation, like how many times did you hear of people saying, like, I was close to retirement, COVID happened, it was my time to bow out. And I totally understand it, honestly. Like it was, such a tough time in small businesses. Like if you're
yeah,
close to retirement, small businesses just, from what I understand, had a really tough time as well. So I mean, it all makes sense to me that a lot of people felt like that was the sign. It was
yeah.
time
I
to
mean,
get out.
especially at that time when, we're pretty much back to normal now. but I mean, at the time it happened, I made a Facebook group that it was like how to do this business socially distant. Like, are we going to have to do virtual tours? Or for you as realtor, right? Like, are we going to have to completely change this,
Oh,
business out?
yeah.
And because we
when
had
it
no
came
idea what
down-
was going on.
yeah, when it came down the pipe, like in the March of 2020,
Yeah.
I was like, oh, I think I actually might be putting on my nursing hat a lot sooner than I thought. I mean, we just all had no idea what was going to transpire. And obviously, like, I don't think, I mean, again, I'm only speaking for myself, but I didn't think the real estate world was going to blow up the way it did. And
Yeah.
like I thought I was going to have a job, not have a job, and within 6 months, it was a
People were
tsunami.
having the best years of their lives. Like
Yeah, it
it
was a
was wild.
tsunami of change. And that's one thing that I found like was really interesting too. I know we're digressing a little bit off interest rates and mortgages, but I just found it, there was a lot of really starving realtors as well. Oh, look, it's telling me to upgrade my Zoom. Um,
Only
but
9 minutes left.
9 minutes. It was crazy how there was tons of realtors that were starving because you had like 15, offers in one place, and offer after offer after offer, and your buyers were getting exhausted. And I wonder if that was the same for your industry. Like, people are like, oh, it was such a lucrative year. Well, was it? There was a lot of people that were working hard without getting paid just due to the competition.
Well, it was here in Vernon, we had an interesting influx of cash buyers, and I believe a lot of that came from the Lower Mainland. And the change was to work remotely, where, I mean, if you're making 100K a year and you're living in Coquitlam and you're having a commute to the office for an hour, and it turns out, well, I can do my job from home and I can sell and buy something, the same house for cash in Vernon, live in the Okanagan, potentially the most beautiful place in Canada, sign me up. So, if you had those people, and I'm talking to a lot of realtors, like, how are things going? They go, I'm busy. I'm like, send me the business. And they go, it's all cash buyers. And I go, okay.
There was a lot
Good
of,
for you.
yeah, there was a lot that way for sure. And, it's funny because my sister and my brother both live in the Lower Mainland, and they never even contemplated coming this way. So it certainly wasn't, everybody in the Lower Mainland, but the majority of my buyers were out of town in 2021. So, and most of them were the Lower Mainland. I think I had one beautiful, amazing couple from Golden, but yeah, it was just a total different motivation as to why they're coming to the Okanagan.
For sure. Well, I mean, we moved up here. Like, I had a condo in Vancouver, and went up in value. We moved up here in 2017 and went from a 1-bedroom condo to a 3-bedroom house with a suite, pretty much making the same mortgage payments, and did the classic market change and took our equity and made it work for us. And we moved here because we thought it was a great place to raise a family, and it is also a great place to retire. So I think what you saw is that definitely some people still love the Lower Mainland, but a lot of people who, again, the baby boomers potentially looking to retire are like, hey, this is maybe where I want to spend my days going forward. And a lot of people with families are going, I can I can move from a condo to a house. My kids can have a yard. It's a smaller community, which I like. So
I mean,
a lot of reasons.
it's hard to even like pin down why the Okanagan. Like, I don't mean to be like my girlfriends in Victoria, when I took my nursing there, used to call me Okanagan snob. But it's true on the aspect that there's so much to do as far as the 3 lakes. I mean, obviously Swan isn't one that you swim in, but there's tons of ice fishing and like amazing canoeing and all that jazz there. But of course, the ski hill, all the hiking, camping, quadding, snowmobiling. Like, it's one of those really mecca wineries. Love downtown Kelowna. It's got lots of amazing things to it. Like, I wouldn't know why you wouldn't move here, to be really honest. I'm like, you've got to try it. You got to come here.
Well, when we were moving up here, Vernon, in some people's eyes, didn't have the best reputation.
How dare you?
Coming from Vancouver, I was not at all concerned, as I'd seen the seedier sides of the town.
Yeah.
But I think the location here is amazing, as far as, you're 45 minutes to Kelowna, an hour and a half to Kamloops, 45 to Salmon Arm, you know,
Yeah.
Sicamous, beautiful places. We have Cow Lake, which is, you know, one of the most beautiful lakes
One
in
top
Canada.
10 National Geographic. And the other thing cool, like, and of course all my Lumbyites will hate me for this, but Lumbee and Cherryville, Echo, Sugar, Maple Lake, it's one of those unseen gems that a lot of the locals are like, just forget about us, just go to, you know, Vernon, Kelowna, Penticton. But I mean, if you like, oh my gosh, that area is just, the Monashee is just stunning. So it's one of those things that there's just so many unexplored, untalked about gems in the Okanagan that a lot of locals would like for us just to keep it, you know, low, because you know, it's so different. Vernon used to be very similar. Vernon's history was just to keep it very small agricultural town, and you can feel that in the roots of Vernon, that they weren't really thinking about having a metropolis mecca here. You know, but yeah, so there is so many hidden gems in the Okanagan. It's neat. Talk about that. I can talk about that forever, which is probably not the right time, since apparently I need to upgrade my Zoom. But hey, we should do this again next week. We should do part 2.
Yes. Well, what do you think of the market going forward? So I'm seeing an opportunity. I've been looking at realtor.ca, and there are some good houses with suites coming down in value. And as an investor, it's always buy low is where you make your money.
Yes,
right?
yes, because then your rent will cover your mortgage. Absolutely.
Yeah, and looking at it like, you know, again, like buying a place with a 2 or 3 year fix, you're probably not going to cash flow much over those couple years. But if you can get it then locked in at a lower rate, that's when the money's going to start coming in, and that's when the market kind of bottoms out. You know, you're going to start to see the speculation come in as well.
Yeah.
And I mean, in history, as far as recessions go in Canada, prices have steadily declined throughout the recession. So what I'm seeing on my end is, if someone is looking to get equity out for a purchase, now is a great time, because your appraisal value is going to be as high as it's going to be for the next probably 6 months to a year.
Yeah.
So you're going to be able to access more equity now.
Yeah.
And then as far as the buy goes, yeah, you're going to pay interest on that equity in the meantime, but there are some ways to gain that back by putting it in certain accounts. You can then watch the market, and I think there's going to be some real good deals coming on this year. For whether you're buying a home for yourself as your first home, or you've been renting a while waiting for the market to turn. You are paying higher interest rates, but you know, they say you date the rate and you marry the home. So you know, you can be in this relationship with your rate for a couple of years and decide that there's a better rate out there for you.
Love it.
But you got the home of your dreams, and you can, you know, get into that. So as far as listing goes, and I mean, you can speak to this more so than I can, but I think now is a good time to list, as values and appraisals are going to come in better. Recently had an appraisal, and on a single family home, the suite, the price has come down about $30,000 since September.
Yeah.
In appraised value. So you know, potentially look at that over the next 4 months. We may see it. Spring market's going to tell a lot as far as whether it's inventory or buyers that come out in numbers. Hopefully both. But you know,
there is a huge, I would agree with a huge advantage of right now, that there is a massive advantage in the fact that your assessed value is high. I literally had 2 calls this morning from clients that are like, hey, how do I challenge my BC assessment? It's just ridiculously high for what they feel it should be. So that is exactly the opportunity. I think you're right on the money there. It is busy in the Okanagan. We're lucky we're in this little hub. It's still busy. And I would agree that this year I don't feel the sky's falling by any means. I just think that there's now just different opportunities that there were than last year. And you just got to figure out what those opportunities are. Just to sign off, I just want to say that one of the things I really like about your style and the way you work is you'll find opportunities for your clients, and you'll find the way to do it. It's one of the reasons that I definitely love about you and the way you were professionally. So we should chat
you.
about this again next week. We'll have part 2. And
Yeah.
but I really love all your ideas, and I really appreciate you taking the time and having this chat with me.
For sure, my pleasure. Always happy to help and inform people of kind of what's going on. I know when I got my first and second mortgage, I was very in the dark about, you know, what it is. So my goal is to educate clients and let them know, you know, what their options are, why they might choose one or the other, and then allow them to make that choice informed, so that, you know, when things come down the road, they know why they are where they are. And yeah, like there is opportunity at any time. So we'll see. And
Give you a
yeah,
call.
look forward to chatting some
We'll
more.
put your number at the bottom of this YouTube, but this this session here. But we'll chat soon. Thank you for your time, Matt.
Yeah, anytime. Have yourself a great day.
Yeah, you too.